At the last possible moment, the Greek government submitted its list of proposed reforms, and it now appears that the eurozone will accept the list, buying the Greek government 4 more months of protection under the bailout plan. With me to discuss the options for Greece are Wolfgang Münchau of the FT and Hugo Dixon of Reuters. Wolfgang, how does Greece need to spend the next 4 months?
Well, they will need to implement those reforms that they are promising, but more importantly, they will have to prepare for the next stage, because the next stage is the one that matters. And they will need to get a completely new deal. The first realization that pretty much anyone who discusses the Greek crisis at European level is making right now is the question is this program that we've had working? And the answer is pretty much it isn't. Austerity has been a disaster. It has been a political disaster. It has been an economic disaster.
I should interrupt you to ask if Hugo shares this assessment.
Not entirely.
Right.
I don't think it has been a good program. But towards the end of last year, or the middle of last year, actually, Greece was growing again.
However, we might disagree on the growth potential of Greece. We agree that the program has inflicted some pain, and there are probably some changes that need to be made.
Absolutely.
And so what should Greece be pushing for?
Well, the first thing they will need to do, they will need to look, they will want to push for a lower deficit. Now, they will say that they don't need a debt restructuring, but that will be difficult to achieve, going for a primary surplus of 1.5%, which is their goal. Without a debt restructuring of some form is going to be very difficult. I've been doing the math, and I said maybe a 3% primary surplus, that may just work if they do extensions of the debt. I guess 3% is not going to be something that the others might be easily offering, and I don't think 3% is going to help the Greeks very much. So we are in a position where the typical halfway compromise is unlikely to work very much. So we're going to see a real conflict, a real showdown. And the only way that I see for Greece to prevail, even sort of moderately, would be for them to have a plan B. And the plan B has to be credible enough. It has to be, Grexit is certainly one plan B. They need to be ready for that. It's not something that they wish to do. And probably the one thing where Hugo and I agree is that Grexit is ultimately not desirable. And they will need plan B for what happens if we cannot sort of reach halfway.
Hugo, do you agree that the primary issue is the primary surplus?
I think where I would disagree with Wolfgang is that I just don't think that there are any good plan Bs for Greece. Not only, we seem to agree that Grexit, leaving the euro, would not be a good plan B, but his sort of middle ground, and there are various middle grounds where you default on the debt and you stay inside the euro. Yeah. I don't see that as an attractive plan B.
Wolfgang, walk us through that.
No, I wouldn't see that as an attractive plan B either. What I would go for as a possibility, and it's not a singular, there's no sort of a magic bullet, but there are some, a parallel currency could work. I don't mean something called the drachma, a piece of paper.
Right.
I'm not
I
talking.
would call it the Guevara.
Yeah, whatever.
Because these guys are very keen on.
But there are some interesting concepts, and one of them the Greek finance minister has worked on. These are sort of advanced tax notes. Right. These are basically you're issuing currency that only fulfills the function of the money as a medium of exchange, not as a store of value, not as a unit of account. Right. These would still be in euro dominated, but the buyers of these issued currency or notes or whatever you call them, they would get a future tax credit. So you issue a €1,000 note, and whoever buys this in Greece could buy off 1,500, say, in terms of future tax relief. So in the meantime, that money would circulate. Now, this is one option which a cash-constrained government could use quite usefully and improve its fiscal position in the short run.
I wonder if, Hugo, you agree that this is a viable option?
It depends on what you're doing with this parallel currency. If you're having this parallel currency at the same time that you default on the debt, which I think was Wolfgang's argument in one of his articles, then I think that would be a very bad idea, because defaulting on the debt would also bring capital controls, and it would also mean that your banks were bust.
Yes.
Because they hold, not only do they hold 15 billion of treasury bills that are issued by the Greek government, but they have some other debts to the Greek government, and that the ECB would conclude that these were insolvent institutions. One thing Wolfgang said is that you could recapitalize them with this parallel currency. I don't think that that would for one moment be accepted by the ECB. Right. So what you would then have to do is you'd have to do what they did in Cyprus, which is you'd have to bail in the depositors. And that would again create further havoc.
Default inside the Eurozone is complicated.
Yes.
That is indeed the case. The Europeans would probably prefer a default inside the Eurozone than one outside the Eurozone for simply legal institutional reasons. It keeps Greece inside. So you would have a situation where Greece would no longer be using euros, but it would still be formally a member of the Eurozone and the legal institutional framework with a suspended form of membership. That's better than a full-scale Grexit. I mean, the reason we had a deal last Friday was very much that Angela Merkel and François Hollande decided that they cannot have a Grexit right at this moment, at the time when they're negotiating with Vladimir Putin. This is the worst possible time. Right. And that's why they are looking at different options that are not quite as extreme.
So let's take a moment to sum those options up. Hugo, you are looking for a softer line here.
Yes, my option, and I think the best option, is a negotiation in good faith that the Greek government actually surprises its partners with its willingness to engage in radical reforms, things that the previous government refused to do because they were essentially attacking what I call the vested interests of the right, the oligarchs, the tax evasion, the corruption, and then starting to implement those things and restoring trust. I think then they would get a looser fiscal target and some debt relief going forward, plus some, further financial support and a credit line, which then might even allow them to re-enter the debt markets.
Wolfgang, I'll give you the last word. Is there reason to think that might not be realistic in your view?
I don't think it is realistic because the gap is so wide that even if there was some minor adjustment in the fiscal target, say from 1.5% primary surplus to 3%, which is I don't think the Europeans would give them more. That would not be enough. With 3%, Syriza will not be able to implement its program. We're already seeing opposition inside the party to what they have been proposing, and I see very little compromise. And there will need to be some form of debt restructuring, maybe a hidden form of debt restructuring. GDP-linked bonds and debt to equity swaps. There's a variety of instruments that various parties could accept in order to reduce the total amount of debt and make this sustainable at a lower level of primary surplus.
We'll have to leave it there, and I look forward to having a similar discussion, perhaps in June. Thanks, gentlemen.
Thank you.